Hello, everyone. I'm so excited to be interviewing Dalia Barsoum, CEO of Streetwise Mortgages. In today's video, we're going to talk about the dumbest ways to die in your real estate investing journey. If you are an aspiring real estate investor or you're in the thick of your real estate investing journey looking to buy multiple rental properties, then you definitely want to check out today's video. What are common things that people do that could end their investing journey? Like, I imagine you don't want to ruin your credit score. Like, what are common things that could really change that?
One of the things that we see sometimes is a client financing or leasing a car between the
Mm,
time they get their pre-qualification or pre-approval to the time they go shop for a property. Or even worse, sometimes they've actually got an approval from the lender at hand because their offer got accepted, and between that time and closing the deal, they go and lease a car or finance a car. And what happens is, because now we have a fixed payment associated with that car, again, financing is a numbers game. It will impact the numbers somehow. In some cases, it may turn an approval to a full decline with that lender. In other
yeah.
cases, it may reduce the loan amount. And in some cases, it's okay. But we've seen that happen with some clients, despite emphasizing the fact that you shouldn't go and do these things if you're in the process of closing a deal or you've confirmed what you qualify for. Do it after, not during that phase. And unfortunately, it does impact the numbers. So that's one of the mistakes.
Oh my gosh. Can you imagine losing on deal or losing your deposit? Oh, okay. That is crazy. Because of you forgot that you leased a car in between that time because yeah, it has fixed payments. It's impacting your cash flow. Is there anything else that could like hurt your imagine opening another line of credit? Like if you had it and you know how there's always find just before tax season or actually now it's always like the bank's always like, oh, open a unsecured loan at whatever this, sign up now. And I imagine that could really hurt the situation as well.
Yes, that's a great point. Some loans are also interest-free loans, right? You get offers all the time. Take this loan, even online when you log into your bank. Sometimes you see offers. Take this 6 months interest-free. Um, Even if you haven't used a dollar from that line of credit or loan, some banks will assume you've used it all in the calculation. So let's say you've taken a $10,000 unsecured line of credit, okay, and your lender is giving you 6 months free interest, and you haven't used it, and like you took it. Um, Depending on which lender your deal is approved with, okay, that lender may assume in their calculation that you've used the entire 10,000, although you have not used a single dollar.
Wow. Okay. Yeah, this is getting like so complicated.
It's always advisable to check with your mortgage broker before taking any loans, before committing to fixed installment payments and so on, to really understand the impact on your qualification or the deal at hand.
Your team and you have been through this many years and your rules keep changing and banks keep changing. So this is really interesting. I was curious, like, what are some other ways that you found that other real estate investors do that has a long-term impact?
Let's say the client is new to investing and they are shopping around, okay?
Mm,
Um,
mhm.
they go talk to multiple brokers and let these brokers present the deals to the lenders behind the scenes. So from a client standpoint, they've got brokers shopping for them. Unfortunately, what happens is at the end of the day, all brokers deal with a core group of lenders behind the scene. Okay. So if a lender receives a deal through different brokers for the same client, first of all, um, it impacts the lender's perception of the quality of the deal. They immediately go, oh, what is this client doing? Why are they sending deals to multiple people? It reduces the trust in the deal. Okay. Number two, as much as the numbers are the numbers are the numbers, okay, mortgage brokerage is actually an art, in my view, because I'll take your information, I'll take everything you've sent me. It's my job to think like a lender, okay, and package your deal so that I help the lender see the best in your deal and
Yeah.
hedge the risk, right? So every broker may package things differently. So if you're sending your deal to multiple brokers and it's landing at the same lender's desk, if one broker packaged it in a less attractive way, it takes away from the overall presentation, and the clients are shooting themselves in the foot. They're actually not getting a better rate or anything by doing this. They're really impacting the approval. They're impacting the trust in the deal. So I highly discourage from going about shopping this way. It's best to pick a broker you're comfortable working with, who's experienced in the space you want to grow, and let them shop behind the scene on your behalf versus you in parallel talking to multiple lenders and multiple brokers at the same time. It actually hurts the deal.
Right. That's what your team is doing. Is actually but presenting the client in the best light and doing the shopping is what you're saying, rather than the person like an investor going to multiple lenders at the same time. Wow. You did talk there. Is there anything else that you didn't mention? I heard about like timing deals. This is something you point out. What does that mean?
Okay, all right. So here's what timing deals look like, and it's not the way to do things. Let's say a client has is looking to purchase three properties, okay, and they come to us and we say, okay, your first deal is going to go to this lender, your second deal is going to go to this lender, your third deal is going to go to this lender, which is part of what we do. We develop what we call a financing path or a financing roadmap. Some clients think that it's best to close the three deals simultaneously with different separate lenders. This way, they get the best financing on each deal. Because if you're staggering the deals, like if you close deal one and then you close deal two, now the numbers may be a little bit tighter because you have some debt. As much as you're bringing rental income in, there is some debt, and then you close the third one, the numbers are even tighter. My job is to make sure you get the best financing for the three, but generally what happens is that the numbers get a little tighter and tighter and tighter as you grow. So timing deals means that someone goes to three lenders simultaneously and goes, okay, I'm closing one property here, I'm closing the other one here, and I'm closing the third one here. Well, they may be able to close it this way, but here's what happens. And again, it's about thinking long term versus
Hmm.
short term. After these three deals close, let's say this investor wants to grow further, and later on, they're going to go back to some of these lenders. The lenders are going to go, hey, when we're talking last summer, when you closed this property with me, um, I didn't know about the other two that are now showing on your credit report. And, these,
Mm.
and these closed around the same time. That's gonna create a problem, right? Like it's gonna raise questions. It's gonna impact the trust in the relationship, and it's not again a creative way to close deals to get better rates. And therefore, this is on the list, and it shouldn't be considered at all.
I was curious. I was just like, to me, it's just, isn't it obvious that you'd have to renew your mortgage like every 5 years, right? Like, wouldn't it be, I mean, I've never done this, so I've never done any of the seven things you've talked about. But to me, it's like, we do go through 5-year renewals. Wouldn't that just hurt them just like that? I mean,
A renewal, here's what happens with a renewal, Tracy. With a renewal, you typically get the renewal from the lender saying your mortgage is up. Here are the different terms you can pick from. If you're paying your mortgage on time, just tick a box, and maybe you can negotiate a rate with them, but they're not pulling your credit. They're not doing title searches. They're not doing any of that. But if you're going to a refinance, or you're buying a new property and you're going to find, like anytime you're refinancing or buying, there is a full evaluation of the picture,
mm,
right? And that's where lenders connect the dots and see timing and all of that.
wow, can you imagine like owning a property for like several years and it's gained a lot of equity, but you can't pull the equity out because of these situations that we just went through? I couldn't even imagine. That would just end it. Oh my gosh. Ali, thank you so much for your time and sharing your expertise. I heard you have some announcements, and this is related to all the things we just talked about. Can you share what it is and let the investors know where to find you and your team?
Yeah, absolutely. So we are rolling out a great service to investors called the financing roadmap. So essentially, we do complimentary planning sessions for investors who come to us and tell us what their goals are in real estate. And in this session, we go over where they are, what they're looking to achieve. We talk about how we're going to maximize their borrowing power. We talk about the mistakes that they need to avoid and be proactive about those. We talk about what financing would look like for their first, second, third property and how they're going to structure it. And we talk about many other things. And after the planning session, we give you as an investor the financing roadmap that outlines everything on how you're going to move forward with your financing your portfolio. So that's the service that we're rolling out formally this month, and investors can book their planning session at info@streetwisemortgages.com. They can speak with one of my amazing senior advisors, and we'll help them design their financing roadmap.
Man, that's amazing because I know I've been through this with you, and it was just like a huge relief, like just lifted it was like a burden before, and then your team just like lifted it from my shoulders because it gives people a confidence like this is you can go through this journey buying multiple rental properties as long as you're and it's great that you have this roadmap to help investors. So thank you so much, Dalia. This is such a great unique experience that you give and share, and it's so generous of your team to do this. So I'm gonna see you next month, Dalia. We're gonna talk about more about this. Anyways, I'll see you later.
I'll see you in the next video.